Hey, let's take a look at Apple. It's been about 10 days since we last checked in. It was trading at 176, now it's at 189. So let's just dig into the news aspect, what's been going on with the company during that time period, and then we'll shift into the technicals to see if now's a good time to pick it up or not. Uh, just to start off, Apple's planning on hosting a fall event on September 12th, and everyone's expecting them to announce their new iPhones, present it potentially, along with, I assume, other products, but the big headliner is the iPhone. They're also starting tests using 3D printers to make smartwatch casings. They believe that this would render obsolete the need to cut parts of metal, so potential cost savings there, into product shapes, reducing the time it takes to make the devices, and also helping the environment. So a win-win on both sides. This would also potentially streamline Apple's supply chain. Again, I assume some cost cutting there. The company also plans to apply the process to its titanium Ultra watch. So they're already looking ahead. They think that this is going to be worthwhile. But the shift isn't planned until 2024. So early goings, I think the most near term impact hearing this could have on the next financial statements is potentially equipment might jump a little bit due to the purchases of it didn't mention how much these printers cost, but that would be a potential near term thing we'd want to look for is them making that purchase, and that could be millions, billions. We'll see. Might not even make a dent at all, but again, we'll see. USPTO settled lawsuit over rejected smart keyboard trademark. So the USPTO, that is the US Patent and Trademark Office, essentially, and I think this is kind of old, like the fact that this is finalized is new, but this case I think was a couple years old, that Apple applied for this trademark, smart keyboard, but the Patent and Trademark Office has rejected it at this point, saying that smart keyboard is just a generic phrase for advanced keyboards. And Apple argued the case that we have other products where we called it a smart phone. That's not a good example, but a smart home or something. They've come up with products and they've used that same type of equation, smart blank. And here's this new one, smart keyboard, but at this point, I guess they've gotten all they could out of that word because now it's just too generic. When people hear smart phone, smart keyboard, they just know it's more advanced, and so that's over with. I'm not sure how much money that cost in terms of lawyers, but probably nothing noticeable for a company this large. We also came across this article saying Huawei's overcome U.S. sanctions by developing its own 5G chip. That hasn't been confirmed yet. It's more so they came out with a new phone and they believe it's as fast as a 5G phone or 5G chip type phone. And so this is concerning because this is competition. As if the phone, because if the phone has reached 5G capabilities, it can impact Apple phone sales. Previously viewed as a big competitor between Samsung and Apple, and then there was these restrictions on, I think, China as a whole. Huawei being in China, they kind of fell behind. So if they were able to now match Apple and Samsung, that could potentially impact Apple's sales. So we'll keep an eye on that. We'll just be able to kind of notice over time with sales, especially. And then the last thing before we pivot into the technicals is Apple's now supporting California's right to repair bill, and this would give people the ability to do more of their own repairs. This one was interesting. Again, not sure how much of an impact this will have because it kind of balances out where originally all that you could do if your phone broke, your whatever Apple product you had, if it broke, you would have to take it to this Genius Bar. They would then fix it for you. You'd have to pay for the services and maybe parts. Well, now they're saying, okay, you know what, you can actually do the repair on your own. And the balancing act here is you would still pay for the parts if you need them. And Apple would save costs because they don't have to pay someone to do the repair, but at the same time, they also lose that profit. Because I assume they were making profit from someone coming in and getting that service. Not sure the percentage, but we'll see how this plays out. It sounds like it's mainly in California right now, and it's still very early, but we will be looking for that to see if that impacts like their service revenue. Uh, but now let's kind of look at the technical analysis. So up top, nothing really changed. I checked today; there was nothing there that changed. So we're still, all the analysts are on board. This is still what we're expecting come next financial statements. Down here is what we saw last time we checked in. So we mentioned this at the top of the show that it was trading at 176. Now it's at 189. We had buy points at 172. Felt like it was a good buy. I ultimately didn't pick this one up. Must have just forgot. I think what happened was, if we look at our notes, it says, yes, there's this short-term uptrend since January, but the uptrend might have broke. So we'll look at that. We did say to buy the dips. It sounds like we were in a dip, but the analysts were projecting a down year in terms of 2024 sales. Just in general, that doesn't even include the Huawei news. That's just sales for that market are kind of going down, at least for this year. And I think that's what happened. At least I believe that's what happened. So anyway, we didn't pick this one up, and it seems like we probably should have. And I kind of wish I did, but 176, and we had buy point at 172. So let's take a look at the chart. What's been going on? So last time we looked, it was down here somewhere in the 176. We noticed some support there at about 172, 173. Still the case today. And it happened to bounce right around there, a little bit up. If we look at the tail, yeah, that actually was almost right on the money. But in terms of like trade activity, most of it stopped around 174. And yeah, it's propelled up. And so at this point, it's kind of tricky. Like me, I'm going to give this one, let me get this out of here. I'm going to give this one like a fair value type rating. And I think it really just depends on knowing when we bought this one. So for us, when I look at this, how it should have been, like how it was meant to be, is we would have bought here, and we actually did. We bought there, that was the dip. We saw that it broke, and so we found a little bit of support here at 173. We said, okay, if it gets down to that area, that's the next time we want to pick this up. It got down there. Unfortunately, we just didn't pull the trigger on making that buy. And so now to see it pull, like accelerate back up, a couple things could happen. The first one being, this might go right back into that uptrend again. If that is very possible, I think that's probably like the majority case, or maybe not. I think that might be the highest probability case, not necessarily a majority, but definitely a strong chance that that happens over the next week or two. Maybe it gets back up in there. Another scenario is, we've seen this with a couple other stocks where they either step up or step down. And this potentially could be a step down situation where it's now going to start, let me just draw a quick line for reference. It might now start bottoming here, so it pulls up to that previous bottom and now kind of gets rejected there, but ultimately still keeps that uptrend. And so it might get rejected right around here at that previous bottom point, pull back to now this new bottoming point while still keeping the uptrend. Still very early to make that call, but that is potentially what could be happening here. And then the third one would be, maybe it's just going to take a break here and chop sideways between a couple resistance points that we have marked at 195 and 172. It might have found support at 172 and just kind of bounced between there and 195. Kind of like it's done in really multiple times over the past 2 years. It's kind of consolidated for a period. Long term, not too concerned. It seems to always break out of that and keep heading upwards. But yeah, this could just be a point where it takes a break, maybe for the rest of the year. I'm not sure. We just need to see more until we can confirm it. So the way I'm playing it, and the reason why I'm giving it fair value, is because again, we picked it up at this dip right here, so we already got a share of this at this price. And yeah, I guess there's that trade-off that if that was a good price before, shouldn't it be a good price today? And yeah, I mean, it definitely can be. It's just whenever I broke down those three scenarios, if we look at the first one, if it goes back into the uptrend, then yes, this should be bought today. But again, because we already bought before, I'm not sure if I would necessarily want to double down on this particular stock. But yeah, if it goes back into the uptrend, then yeah, we missed out. But if we look at the second scenario where it does this step down thing, and the new bottom is going to be maybe in the 180s, maybe it pulls back to there while keeping the uptrend, and therefore why not wait a little bit compared to if it continues the uptrend and it hasn't kind of been rejected yet. We're seeing the rejection point being around like 196, and so if it gets rejected there, it's kind of just right in the middle. So I think that's a case for the fair value. And then that third scenario of trading sideways, what we're seeing would be the most likely case of that would be around 173 up to 195. And to be at 189, it's kind of in the middle of our scenario 2 and scenario 3. Only scenario 1, it makes this one like an ideal spot to pick this up. And even though if I were to weight these, I'd probably give like 40% to, yeah, we might get back up in the uptrend. The thing that kind of holds me back from that is the note that we left ourselves saying that the analysts project a down year in 2024 for handsets, so phones, of 6%. That kind of worries me. And so that's why I'm getting it the score of fair value. Let me know what you think, where this one's heading, but that's my impression at this point. I just want to see more data points. So yeah, just to quickly summarize here, this is how I'm seeing it. We have Apple at 189. Buy point would be 172. That would be that support line again. And resistance 195. That's a previous all-time high. Got stopped out there, pulled back. Now it's right there again. Not much resistance is at 195. That should also be noted. But yeah, it's been rejected there, and we took note of that. Updated the dates, earnings not for another couple months. And then that note, we'll keep it as is for another week or two until we can confirm that uptrend is done with. But there's still hope for it. So short-term uptrend since January. Maybe it's been broken, but we'll keep it in, like I said, for maybe another week or two, see if it can get back up. Buy the dips. At this point, the strategy's kind of changed to where we bought our dip already. I would just say more is on the buy point. So I think what we'll do is we'll actually remove the buy dips point here. Might get added back soon, but it's probably best to remove it at this point. And then that last piece, analysts project a down year 2024 for handsets. They're estimating 6%, so might see an impact on revenue for this company. But Apple's very strong. They have multiple product lines. We'll see how it turns out, but again, that's how I'm seeing it. If you have any comments or questions, just let me know down below. Otherwise, please like, subscribe, and I'll see you on the next one. Bye.